Welcome to the latest Motley Fool Scoreboard. I'm Anand Chekkavelu, and we've got longtime fools Jason Hall and Nick Sciple giving a 1 to 10 rating to a top 200 stock in the primary Hidden Gems database. It's Abercrombie Fitch, ticker symbol ANF. Nick, first we'll talk about the strength of Abercrombie's business, including factors like industry and competition. 10's invincible, 1's hopeless. Nick's at a 7. Jason, you're a little lower at a 6.
So we recently did a video about Technic FMC, and I talked about not wanting to grade on a curve. So I want to do the same thing here, because a 6 is a low overall score, but in the realm of these businesses, I think this is a really good business. It's just that winners are rare and fleeting in retail fashion. If you look at the growth of this business over the decades, the fact that it's outsurvived so many of its former peers is notable. But when Nick talks about the business, you're going to note that he talks about quarters of consecutive growth, not years of growth. This is a brutal competitive industry, and even the best of them have a hard time winning.
Yeah, I went a 7. As Jason said, I will highlight Abercrombie has delivered 12 consecutive quarters of growth. That's 3 years of growth with its 2 brands, really serving different demographics. Hollister serves the teens and young adult demographic. Think about your kind of Gen Z, Gen Alpha group. Has really been firing all cylinders in recent quarters. 10th consecutive quarter of growth. Did 16% growth in the third quarter. Meanwhile, Abercrombie, which is the other roughly 50% of the business, has evolved over the years to target that 20 to 40 demographic. Expects to return to growth in the fourth quarter after lapping really remarkable performance over the past few years, where they were putting up 20% plus comp store sales. That said, this is still fashion retail, fickle consumers, constant competitive pressure, and we're in an environment where tariffs are eating into margins. Abercrombie's a strong operator in a tough industry. That's good for a 7.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you have 8s, Jason.
Yeah, I'm just gonna steal from Nick here. Fran Horowitz, I agree. She's probably one of the 2 or 3 best in this industry, and taking over and leading a turnaround since coming in 2017. Had the great brand, very well recognized brand, but the business behind it was really struggling. Turned it back into a winner, not just better operations, which is important, but also attracting more customers on the fashion side. And doing both of those things is really hard. But at the same time, I think there's also more risk on the balance sheet, and it's more leverage today with higher total liabilities than when she took over. So there's still some things that investors need to keep in mind. Even great managers sometimes might do things that create a little more risk for the business.
Yeah, I agree with Jason with an 8. Since taking over as CEO in 2017, Fran Horowitz and her team have delivered about a 10x total return while reducing shares outstanding by about a third. Have also executed that evolution of the Abercrombie brand from being more of a kind of a teen and tween brand, aging it up to more of an adults-focused brand. We've already talked about the strong performance those brands have delivered. They've done a great job navigating tariff issues and staying the course this year, despite a lot of volatility in the stock. Have really taken advantage of the downturn in the stock to buy back quite a bit of shares. And as I said, I think she's one of the best CEOs in retail. That's good for an 8.
Yeah, I think Horowitz, what she did was take a recognizable brand or brands and actually make it a real brand in terms of actually delivering business value, because that's the purpose of a brand, right? We'll see if it works long term. For financials, a 10 is a fortress, a 1 is yikes. Both of you have 7s, Jason.
Yeah, Nick will kind of hit some of the details that are the positive things, but a couple things I want to talk about. Number one, some of the gains that we've seen are because of the share buybacks. So you're seeing a lot of the per share metrics look good, but a lot of that's because of buybacks. The one thing I want to focus on is the total liabilities. It's over $2.1 billion. That's up roughly 60% since Horowitz took over as CEO. That's notable. We've also seen inventory turnover has fallen over the past year. It's a little bit understandable because things were going so well. And now they've kind of lapped some of that tough period, and they're not turning their inventory as quickly. But it's just worth noting that those are kind of signs that with retailers, that if things don't continue in the positive trends, things can get ugly really quick with a balance sheet and operations, because you have too much inventory, you're having trouble dealing with your liabilities, maybe your store footprint's too big. So just kind of things I like to keep in mind when thinking about the financials of a retailer.
Yeah, also with a 7, over $600 million in cash on the balance sheet. When you exclude lease liabilities, 0 financial debt on the balance sheet as well. Operating margins around 13%. That's after absorbing 170 basis points of tariff costs this year, and I think there's a decent chance those could reverse before too long. The Supreme Court will have something to say about that. They're on track for record net sales again here in 2025, and they have repurchased 9% of shares outstanding through the first 9 months of the year. Freight headwinds from early 2025 are becoming tailwinds for the business, but as we keep hitting on, retail is inherently cyclical, and these margins could compress quickly if consumer preferences change and you see those positive comps turn negative.
All right, let's see how this will work, Nick. Let's talk valuation. What will Abercrombie stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
So I went 5 to 10 year returns of 10 to 15% with a safety score of 5. So this is fashion retail. You're never going to be truly safe, which is why you get that 5 safety score. But I think you got a combination of a good business, a good manager, a reasonable price, and some tailwinds that I think can make this a market beater over the next 5 years. So we've talked about the good business part, record overall results, Hollister comping mid-teens, and Abercrombie starting to lap that really strong performance from the past couple years and getting back to growth. To keep that success going, you need a good manager and capital allocator. I think Fran Horowitz is doing that and will continue to do that. Trading about 11 times, 12 times earnings, a mid-single-digit free cash flow yield. That doesn't seem, incredibly expensive to me, although I wouldn't expect a ton of multiple expansion from here. And on tailwinds, as I mentioned, freight costs that were headwinds are shifting to tailwinds, and I think there's a decent chance that tariff headwinds reverse and become a tailwind for the business. I think all those things can combine for a business that can beat the market over the next 5 years. But again, if trends in fashion change, that can change real quickly.
Yeah, I'm just less convinced that we're going to see the strong growth that we've seen continue, and I think that's going to lead to a period where margins are not going to be as strong, operating costs are going to continue to advance, and that's why I think 0 to 5% is probably more likely, and also that same safety score 5. I agree with Nick. Fran Horowitz is one of the best. The cycle's just been incredibly good, and I don't think we're going to get another 5 years where a mature business that's this big, that has reinvented itself, is going to continue to deliver growth. It's just bringing a lot of customers back. I don't think that there's that many more new customers to continue driving growth. So even the best are going to have a tough time. And I think sometime over the next 5 years, it's going to get tough again. And even having Fran Horowitz in charge is not going to let the company be able to avoid that. And that's going to hurt the stock price at some point.
Thanks both Jason and to Nick. They've given Abercrombie & Fitch a mediocre overall score of 6.4 out of 10. For Toppets, Canada wins. Nick prefers the growing Aritzia, and Jason prefers the value-priced Lululemon because he believes that it's in a good turnaround right now. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is the aforementioned Aritzia. You won't want to miss that one. Till then, Fool on.